So to my knowledge, there are only two finite, 100% finite store of values, and those are Bitcoin and art by deceased artists. And guess what? Like, I don't have the kind of money around to buy a Rembrandt.
Hello, everybody. Welcome back to the Mouthy Money podcast. Today, I'm joined as ever by my good co-host, Chris Chu, who is Head of Consumer Finance at MRM. Chris, hello. How are you doing?
Hi, Ed. All good, thanks. How are you?
Yeah, not too bad, actually. So we've got something that we touched on in the very early days of the podcast, and we haven't come back to it. We've been desperate to come back to it. And we have found the absolute perfect guest to discuss with us this idea, and that idea is Bitcoin and what on earth is going on with Bitcoin in 2025. So we talked about it ages ago now. I think beginning of 2024 I think is when we did our first piece about it, and there was a lot of different stuff going on, but there's a lot happening. There's a lot in the news about Bitcoin, and there's very interesting things underway. So we are joined by Daniel Parkinson, who is the Bitcoin IFA. Daniel, welcome to the podcast.
Thank you, Ed, and hi, Chris. Very excited to be here.
It's brilliant to have you on. So we're going to get into all sorts of stuff. We're going to talk about why Bitcoin is doing what it's doing in terms of its price at the moment, just to understand a little bit of the cycle and why it's kind of, it's at it is a relatively high level. I'm not going to say a specific price because it depends when you listen to it. It might be slightly different because it does move around. We're going to look at some of the stuff that's going on in the UK. We're going to look at things like Bitcoin ETFs, whether that's coming. We're going to look at Rachel Reeves and the decisions she may or may not be making. I can see Dan having a little wry smile about that one already. And we're going to look at a little bit more sort of at kind of the context of if you're interested in something like Bitcoin, and Dan's going to give a bit of kind of a bit of info on this, is what you should be thinking about and looking at in terms of exploring it as an asset class of its own, and just some other ideas in that area. Now, with all that intro out of the way, we're going to get you down. Just tell us about yourself, tell us about your background, and tell us about why you are now the Bitcoin IFA.
Sure. I'll give you a quick summary of the last 20 years. I worked in media and advertising and ad tech for about 15 years in London. Deeply unenjoyable part of my life. I was good at it. I was very well paid, but I really didn't enjoy it. So I took a career break and I ended up in Lebanon, where I was the founding teacher for a new charity, and I was teaching English and football in 2 refugee camps in the southern suburbs of Beirut. While I was there, Lebanon was experiencing hyperinflation. So I arrived, it was a cash-only society. So I arrived with thousands of dollars in hand to take me through that first sort of 6 months to a year. And you had to buy lira on the black market. So the official exchange rate was still 1,500 lira to $1. The black market rate was 5,000. So I bought $1,000 worth of lira, 5 million lira, because it was a hassle. I didn't want to be doing that every day. Being British and stubborn and a man and having never experienced hyperinflation, I was told that that was a terrible trade by all of the Lebanese that I met, and I dismissed it. I wasn't curious, and I just said, no, it'll be fine. 3 days later, the exchange rate had crashed to 8,000 lira to the dollar. My 5 million lira that bought $1,000 worth of stuff, 3 days later bought $600 worth of stuff. And it was the first time where I had experienced a trade. Like, all currency conversion is realistically a trade, but it was the first time that I actually saw it as a trade and realized that I was making terrible choices in my trade. The only people that didn't seem to be running around Lebanon like their pants were on fire, desperately trying to convert this lira that was melting in their hands by the minute, were the ones who were in Bitcoin. And so I had heard about Bitcoin like everyone else, 2012, 2015, 2017, 18, 19, through various people, and just dismissed it out of hand. The story I had made up in my mind is, this is too disruptive, governments will never allow it. But I hadn't done a minute's research. So during the course of some lockdowns in Lebanon, I was constrained to my hotel room for lengthy periods. I went down the rabbit hole of Bitcoin and then money and currency, the history of money, inflation, debasement, all of this stuff, and have been a Bitcoiner ever since.
I think that's such an interesting concept. We'll post the old episode, and I'm not going to refer back to it further from here, but the old episode we did about Bitcoin, the guy we had on was from Argentina, which he has the exact same experience, right, of that hyperinflation and watching fiat money go down the drain on a daily basis. So there must be something very powerful in going through that and seeing that firsthand, that destruction of value.
I think it's probably one of the reasons why Bitcoin has been embraced globally by the global South, like more than the global North or the West. Certainly, some open-minded, curious, progressive people that want to do their research on Bitcoin in the West are now becoming very wealthy as a consequence. But in terms of an actual lifeboat, it is the global South, people under authoritarian regimes or people where their money is literally melting. And let's not get away from it, chaps. I like to show in my present workshops and webinars to financial advisors now. So the Bitcoin IFA I was a financial advisor. I retrained as a financial advisor. I did that for less than a year because I was just like, this doesn't make sense. I found Bitcoin first before going into TradFi. Typically someone will do 20 years in TradFi, then find Bitcoin. And I now train financial advisors on Bitcoin. And a chart that I like to show is the purchasing power of the lira versus the dollar over 3 years. But if you flip that on its x-axis, that becomes the purchasing power of the dollar versus the lira going backwards in time over 3 years, and it falls significantly. And then I show the purchasing power of the dollar over 100 years, and it's the exact same chart. The only variable is time.
Yeah, interesting. So now you say your focus is talking to the financial services sector, in effect, in the UK about Bitcoin. Is that just about educating them more about how they can work with clients? Is that the kind of the fundamental what you're doing now?
I think it's even earlier than that. There is a percentage of financial advisors or people that work in financial services in the UK that will never be Bitcoiners, and that's okay. There is a small percentage who are already Bitcoiners and would love to be able to talk about it with their clients, recommend it to their clients. Side note, there are routes to do that within the current FCA regulations for retail investors. Shameless plug there for my services. And then there's probably, 80% in the middle there who just don't have the time, because Bitcoin isn't something that you can't just watch a 5-minute YouTube video and fully understand it. I've managed to distill probably about 80% of what you need into a 90-minute webinar. In fact, I would say almost 100%. Like the webinar or workshop that I present, plus the handout that I give at the end, is pretty much all you would ever need to advise on Bitcoin. The vast majority just haven't done the basic information, right? So they feel scared about talking about it with their clients. They don't feel comfortable or confident. They don't have the knowledge. A lot of them have been able to hide behind it's unregulated. So if a client brings it up, they can just say, treat it like a hot potato. Can't talk about this. It's unregulated. Those days are numbered very, very swiftly. We expect to see the FCA lift that ban on retail access. I'm sure we're going to touch on that. So really, I'm going in and assuming zero knowledge. So the way I like to pitch it is I'll take you from zero knowledge to the most informed person in the room in less than 2 hours.
Yeah. So we're going to talk a little bit later about kind of for normal people. We're kind of not going to focus too heavy on the kind of financial services side of it, but we're going to look at how normal people can go about, getting interested in it and that kind of thing. But let's talk about a little bit of context now for Bitcoin. Obviously, it's been on a journey in the past few years, and the value has changed enormously. At the moment, it's somewhere, I think, around $120,000 to a Bitcoin. Do you want to just give us a bit of kind of context on what's happening in the market at the moment and kind of what's driving some of those increase, the increases or volatility or lack of volatility at the moment?
Sure. So there's a couple of things you've touched on there. So the price at the moment and the volatility. So those two things, we'll try and cover them off here. So Bitcoin works on an historically observable 4-year cycle, and it's typically 3 years up, 1 year down. And the reason for that is there's a couple of things. So the first is the halving, which we'll touch on separately. It also tends to fall in line with the business cycle and the monetary cycle. So a brief history lesson here, 2008, everyone went broke. Governments around the world went broke. So what they did was set interest rates at 0 and took out a load of debt. And that debt typically has to be refinanced every 4 years. So that happens to coincide with Bitcoin's halving sorry, the way the halving works tends to, and the run-ups afterwards tend to coincide with that business cycle as well. I don't want to go too much into the technicalities. What I would recommend is someone just, go onto YouTube and type in, what is the Bitcoin 4-year cycle? There'll be a quick 10, 15-minute video on this. You can go into the real intricacies. All I will say is there is, to date, a very observable historical 4-year cycle, which is 3 years up, 1 year down. And around 30 to 50% of the gains, again, based on historical observable data, doesn't mean it's going to be replicated this cycle, but historically 30 to 50% of the gains have been made within about the last 12 weeks of that cycle. We are entering those 12 weeks now. So historically, the lows have been about 500 days before the halving, and the highs, the peaks of the cycle, have been about 500 days after the halving. The last halving was last April 2024. 500 days after would put us around the 2nd of September. I think it is 2nd or 3rd of September this year. None of this financial advice. Do not go out and put everything into Bitcoin today expecting there to be massive gains, because none of this is guaranteed. It's just observable historical data. So we would expect there to be quite explosive upside over the next few weeks.
I think one of the observations about Bitcoin is that it acts almost like a little bit of a sort of, it's almost like a monetary debasement index. I think I've seen it too referred as, where the more governments, and particularly the US, because the dollar is the global reserve currency, the more the governments print, the higher Bitcoin goes, because it acts like a hedge against that system. Do you think is that always been true? Is that more true now than it was in the past? I think it's something that a lot of people are aware of now. How much sway do you think that's having on the movement?
A lot. So currency debasement in general finds its way into risk assets. So something I also like to show in my workshops is currency debasement since 2008 has a 1-to-1 correlation with NASDAQ performance. We're debasing currencies at about 8% a year. You then have to add on inflation figures, so which is globally about 4%. So your hurdle rate globally is about 12% a year. And guess what? The NASDAQ average is about 12% a year. So all risk assets find themselves increasing during periods of large currency debasement. But Bitcoin tends to accelerate further and faster because of the halvings.
Yeah. And that's because it makes the creation of future Bitcoins ever increasingly difficult over time, doesn't it? Whereas an equity or a stock, a company could simply just issue more stock at some point or issue more debt, and they can almost expand their asset base at will, can't they? So there's no predictability to that as an investment, whereas Bitcoin, it's kind of hard coded in. That's right? Is that right?
That's absolutely correct. So there will only ever be 21 million Bitcoin. 18.9 million of them have already been mined. They're already in circulation. By 2034, it will be 99%, which means there will only be 210,000 remaining to mine, and it will take about 100 years to mine those last 1%. So Bitcoin's inflation, if that's what you want to call it, is programmed over the next sort of 110 years, something like that. So to my knowledge, there are only two 100% finite store of values, and those are Bitcoin and art by deceased artists. And guess what? I don't have the kind of money around to buy a Rembrandt. Do either
What
of you
about,
do?
is gold not finite? I mean, obviously there's potentially limitless across the galaxy, I would imagine, but...
So gold was the best store of value that we had until Bitcoin, because it is very difficult to dig out of the ground. So Bitcoin is backed by the same thing that gold is backed by, which is proof of work. It's really difficult to get hold of it, right? And consensus. As humans, we have consensus that gold is valuable to us, right? So that's why the demand is there. But gold's stock to flow ratio, so stock being the existing stock, flow being the amount that we add, new gold that we mine from the ground each year, is about 2%. So side note, that's also where Keynesian economists got their 2% inflation target from, because they said gold has been inflated at 2% a year since forever and has always maintained its value or gone up in value. So no, gold stocks, debt, collect some, maybe, classic trainers, classic cars, classic watches. Maybe those are finite to an extent. But, if you go 20 years into the future, there will be more classic cars from today. So no, to my knowledge, the only assets that cannot be inflated when demand or price goes up are Bitcoin and art by deceased artists.
Chris, I'm going to bring you in here now. I'm going to put you on the spot because I see you've been listening keenly for the first portion of this podcast. Chris, do you hold any crypto assets at all?
I do, yes. A few friends and I. So I've worked with clients in the past who work in the crypto space. So been aware of it for a while. And some of the things that we're talking about here, are not news to me, although that 2% inflation figure coming from gold certainly is. That's something I'll add to my toolbook. But so I'm kind of aware of it. Recently, a few friends and I were sort of in the pub and we're like, right, okay. I kept getting asked questions about it. What is it? How does it work? Et cetera, et cetera. You can explain it till the cows come home, but the view I took in the pub and the guys agreed was the best way to learn about it is to have some skin in the game. And have a look at what's going on yourselves. So we all pulled together some money, not huge amounts. We could all afford to lose it, all that kind of stuff, and put it in collectively into 3 different cryptocurrencies. So Bitcoin and Ethereum were probably the 2 sort of main ones. Obviously, Bitcoin is standout as the major one, and then Ethereum is probably the second one. Has got some interesting side uses, and then Solana. And then almost immediately, through the quirk of timing, we went deep into a crypto winter. Everybody asked me why the hell I'd said that we should potentially do this, and I've reminded them that they're all big boys and girls and need to understand their own risk profiles and all the rest of it. And we've held it. As you rightly pointed out, Ed, it's probably doubled in value now compared to where it was when we bought it. Now, again, we're not talking life-changing sums of money here, a few £100, but it's been very interesting to watch its kind of development in that regard. And I think that kind of leads me on to, I'm very much a sort of typical dumb, I was going to say young and dumb, but sadly only one of those 2 things is true, retail investors. And how do you respond to people who are worried about the volatility or the risk of total loss? Because I do, the FCA, if you think about it, and this came up in our conversation, say, look, you could end up with absolutely nothing. So what's your kind of response to that? Why are they so keen to point that out?
Honest opinion?
Please.
I don't think they understand what it is.
Right.
I think they are overworked, underpaid, and they simply don't have the time to put the 10 to 100 hours that it takes to really become up to speed on Bitcoin, and then the 10,000 hours that it takes to become an expert. I've done that 10,000 hours and it's taken me 5 years. So if you've got a 9-to-5 job and someone's breathing down your neck and just being like, can you just build some regulation on crypto? You're like, yeah, fine. We'll just lump them all together and we'll come on to that, why Bitcoin is different. And we'll just say that they're too risky. We're also incredibly risk averse in this country. Right? We highlight risk, whereas in my opinion, we should be highlighting reward, right? You take more risk in order to gain more reward. So if you want to put all of your life savings into cash, you get 3% a year. But, as I've highlighted earlier, your hurdle rate is 12%. So you're losing purchasing power every year. If you want to put it in a 60-40 portfolio, you get 7% a year. Your financial advisor maybe takes one of those, and then you're still nowhere near that 12% hurdle rate. So we should be thinking in terms of, I'm prepared to take a bit more risk with, a percentage of my portfolio in order to try and maintain my purchasing power, or to even try and create wealth, actually build wealth in a portfolio ahead of that 12% hurdle rate. So that's the first one. I think that's why the FCA are so sort of anti this, if that's the correct term. In terms of your question, can it go to zero? Personal opinion, absolutely not. In fact, there are hard facts on that now. So someone recently posted on Twitter that they've put a limit order buy for 21 million Bitcoin at 2 cents. So there is no chance of it going to 0. But in terms of it, massive crash, potentially completely going to zero. I would say there's probably the same risk as gold at this point. So because as humans, we have consensus that Bitcoin is the digital currency to purchase. Also because there is huge institutional and nation state demand now, and because it is so hard to get. right? So when you've got really, really difficult proof of work, if there's any element of demand, there's going to be a relative, of that. So it's the same with gold. I personally believe there is no chance of it going to zero, but that's a personal opinion, right? So nothing is a 0% probability. Gold could go to zero, the S&P could go to zero, Bitcoin could go to zero. All of the other cryptos, I think there is a much higher percentage of them going to zero. So let's actually touch on that here. So the difference between Bitcoin and all of the other cryptos, right?
Yeah.
Bitcoin is a decentralized protocol, meaning that you've got hundreds of thousands of nodes around the globe, and there has to be consensus on all of the data for each new block for the node to be included in the network. So let's say the three of us had nodes. We all agree that these are the transactions that have taken place. This is where the new Bitcoin that is mined is going to go. And then I suddenly decide that actually I want 1,000 extra Bitcoin, right? Well, then I'm not in consensus anymore. So you two would move forward without me, right? So if you don't have complete agreement in the network, you're out of the network, which incentivizes you to have complete agreement, right? So that's decentralization in action. All of the other cryptos, to some extent, are centralized, which means, so if we take XRP as an example, XRP bugs try and tell me all the time, well, there'll only ever be 1 billion XRP tokens, and they burn some. Every time there's a transaction or something, some of them disappear. So in theory, it's got a deflationary aspect to it. And I'm like, yeah, sure, maybe, but it's still centralized. It's still owned by a company with a central team of humans who have a marketing team, a lobbying team, a very strong lobbying team in XRP's case. And the single point of failure, or the point of failure, are the humans, right? So let's say someone was trying to tell me this, and they were trying to tell me this great idea of why XRP is going to go up to $500 a coin. It's currently at like 3.5, something like that. And I was like, okay, let's say it does go to $500 a coin. What is to stop the owners changing the protocol and just saying, look, we'll just release 1 million extra. It's just a casual 500 million. We'll dump that on retail and we're done. All of the rest of crypto. So in the Bitcoin world, in the TradFi world, people would tend to put gold, commodities, fiat currencies, pounds, dollars on this side, and then have a line or a wall in the middle, and then have Bitcoin and crypto on the other side. In the Bitcoin world, we would say it's Bitcoin, wall, and then everything else. Bitcoin and art by deceased artists, wall, everything else, because everything else to some extent is centralized, and the point of failure are the humans that control it, not a completely decentralized network with consensus.
So we touched upon a little bit about, you said kind of the regulator just doesn't really understand it properly. And I think that's an interesting kind of lead into what one of the kind of the more kind of topical recent things that's been happening in the UK around Bitcoin. So last year, in the US and in other places, there was a wave of Bitcoin ETFs started being introduced. And this, as we've kind of alluded to, has changed a lot of the makeup of who holds Bitcoin. It's now held on behalf of clients for the most part, by major global financial institutions. And the UK is still an outlier in that we're not allowed as citizens of the UK to hold those instruments yet. But there has been a change of heart, hasn't there? Do you want to just explain to us what's happened around that, and why we might soon be able to, for example, put Bitcoin in an ISA or a pension even?
Sure. Yeah, I'd be happy to. So let's do a very brief history lesson. If we go back to pre-2021, I believe, retail could access Bitcoin ETNs, not ETFs, within their tax wrappers, within SIPs, within ISAs.
So an ETN is an exchange traded note. Is that fair?
Exchange traded notes.
Yep.
Very briefly, the difference there. An ETF is a fund, right? And it has to own the underlying asset by law. And you buy, in the same way that you would buy a share in a company, you buy a share in the fund, which means essentially, if all three of us had bought part of a Bitcoin ETF, we are the fund's owners, if that makes sense, right? An ETN is different in that it's a debt instrument. And what that means is there's a couple of differences. Firstly, the owner, creator of the ETN doesn't technically have to own the underlying asset. Now, my understanding is for most of the European ETNs, they have opted to own the underlying asset. but they don't legally have to. It's also just a promise to pay, right? So the analogy I like to use is, imagine you own your house. With an ETF, you own your house, right? If you own 100% of the ETF, of the fund, you own the house. With an ETN, you can own 100% of it, but you are still only promised to be paid the value of the house upon sale. You don't actually own it, right? So there's a little bit of a difference there. So we could own ETNs until 2021, then the FCA banned them for retail access. I know some people that still hold them in their ISAs and their SIPs. They're doing very, very well.
Sitting tight on it, I imagine.
Yeah. Well, they were loath to sell it because they wouldn't be able to rebuy it.
Yeah.
And then in fact, in August 2023, a company in the UK launched the first European ETF. So they're a company called Jacobi, and they launched the first European ETF before the US. The US then launched a swathe. There was about 11, something like that, companies that launched in January 24. BlackRock being one of them. BlackRock's Bitcoin ETFs, best performing ETF of all time, got to their equivalent of their gold ETF in like 10 months, something like that. The gold ETF took 40 years or something like that. So yeah, and there's been huge retail uptake of those and professional uptake from advisors for their clients. On the 6th of June this year, the FCA announced a proposal to lift the ban for retail access to ETNs. And they've put a consultation out to market. Now, my understanding is, for people that are much more well-versed in these things with the FCA, have a much longer historical track record of working with the FCA, the FCA only puts these proposals out and offers a consultation when they've already made their mind up. So the rumours, these are rumours, the rumours I'm hearing is the ban on retail access to ETNs will be lifted in September this year.
Okay, very interesting. Wow, Mouthy, can we call that a Mouthy Money exclusive? No, that's really interesting. I completely agree about, we have to have retail access to Bitcoin ETFs. I actually feel quite strongly about this, and I'm not particularly strong this way or that about Bitcoin. I think it's very interesting, and I think everybody should be paying attention to it. I'm not on the street corner chatting about it kind of thing. I kind of get on with it quietly. I do feel very strongly though that we should have access to the ETFs, because if you don't give people access to that, and obviously the benefit of having it in an ISA means that no capital gains tax or anything like that, and pension's slightly different, but again you have some form of tax protection there, although it does function slightly differently. When people don't have access to it in a legitimate way, it's kind of like the old, banning alcohol and prohibition and that kind of thing. When you ban it, people are just going to go find an illegal way to go and do it anyway, and that just leads them into more dangerous outcomes than necessarily they need to be exposed to. So obviously there's lots of legitimate ways to hold Bitcoin that aren't illegal or problematic, but then there's plenty that are potentially as well. Do you think that's fair?
I think that's very fair. To hold large amounts of Bitcoin now, you really want to be holding it what's called on-chain, right? And that's beyond probably 98% of the population, right? So you have to give people access to Bitcoin where they are. Right. So if that means in an ISA, great. We have access on things like Revolut and Monzo and blah, blah, blah. Right. There's various apps, and soon, I think a lot sooner than we believe, we'll be able to access it, just in our NatWest app or our Nationwide, please, etc. Once you start holding serious amounts of Bitcoin, for now, it's not protected by the FSCS scheme, and you don't really want it in what's called a hot wallet. So you don't really want it in a wallet that's connected to the internet because it's hackable, right? So, but if you hold it within your ISA, if Hargreaves Lansdown get hacked and someone takes all of your funds in your ISA, then Hargreaves Lansdown are liable, right? But if your phone gets hacked and someone accesses all your Bitcoin in some other app, that's potentially not replaceable. So you're absolutely correct. Also, once we open up ISAs and SIPs, it also allows for professional financial advisors to present it to people as well, right? So what we In my opinion, Bitcoin is a net good for society and a net good for individuals in terms of wealth creation and wealth protection. In that case, we want to have as many people to have access to it as possible in a way that they feel comfortable, knowledgeable, and confident being able to manage.
I feel like that user experience and that kind of, quality of life for customers is actually quite compelling, because it's like most people are not going to go out, and in the same way, they're not going to go out and go and get a paper stock of a company and, hold that at home in a safe kind of thing. People go to platforms where they're happy to exchange for a small fee that this platform will look after that, will custody that asset for you, make sure that it's protected from hacks and that kind of stuff. So I think that's absolutely what people should be kind of, and I think your attitude is really good on that, is, no, let's just do what people want, what people find easiest, just get them involved kind of thing. That's really, really, really good.
Ed, can I jump in on
Chris.
that? Just there's a couple of things that just thinking about how you position Bitcoin within a broader portfolio. And so, is it a hedge? Is it a speculative asset? Is it something else? And then the other thing I wanted to add to that is, what kind of investor should not be in Bitcoin? Is there anyone who you think, actually, if you're looking to sort of make, my immediate reaction is, I'll tell a bit of a story here. I remember going over to a friend's house for Christmas, and his mother was a very diligent saver. And she was like, I've been making, a couple of % on my savings here. Tell me about this Bitcoin. I think I might just pile all my money into that and see how I get on. And my immediate reaction was, don't do that. You might want to learn a little bit more about it. And there is that sort of element of people who don't understand it thinking it's kind of a get rich quick thing, or that has been a thing in the past. So I'm quite interested in whether you've seen that evolve, or whether you think people still think, right, this is a route for me to kind of build wealth very quickly, or whether people take a more sensible approach and say, look, this is a growth area for a variety of societal and political and economic reasons that you've outlined. So there's a lot of questions all in one there, but just a sort of a general response to that. What's your sort of take on that?
It's a really great question. Well, sadly, I think what tends to happen is Bitcoin enters the mainstream narrative or mainstream awareness, shall we say, consciousness, for about 3 months every 4 years. And so in the period that we are now facing over the next sort of 3 to 6 months, where we historically would expect to see very large gains, that's when it enters the mainstream consciousness. Retail pile in, try and treat it as some speculative get rich quick asset, and end up losing out. So for anyone that wants to do that, I would say do it with a very small amount of money, treat it like gambling, right? And expect that you're probably going to lose your money, or not lose it all, but you're probably going to make a loss unless you hold it for a minimum of 200 weeks. So because of this 4-year cycle, if you have bought Bitcoin, it has a 100% hit rate of returning more than you bought it for if you've held it for 200 weeks. In fact, today I was just building a slide. Someone sent me some new information. If you'd have bought one Bitcoin at the tops, so there's been 4 historical tops, 69,000, 20,000, 1,000, 1,200, and $25. So if you'd have bought one Bitcoin at each of those tops, it would have cost you $90,000. And today it would be worth about 480. So if you completely mistime Bitcoin and buy at the top, and every cycle, as long as you just hold it for a minimum of 4 years, you will make money, right? You will have made gains. So that's what I would say to anyone who doesn't want to just do a modicum of research on this thing, right? Just buy it and hold it for 4 years. That's it, right? Once you start doing a bit more research, then you can start going out a bit further on the risk curve, right? Once you truly understand what Bitcoin is, how it works, the 4-year cycle, etc., then you can start potentially looking at allocating percentages of your overall portfolio, right? And I'm going to tell you an anecdote of a chap called Pete Dunworth, who is a financial advisor in Australia. He allocated 1% of all of his clients, 1 to 2% of all of his clients' portfolios in 2016, so 9 years ago. Bitcoin has done a 50x since then. It now represents somewhere between 50 to 75% of his clients' portfolios. They've all done very, very well. He gets 100% of his referrals from 100% of his new business from referrals of his existing client bank. His firm's revenues have done somewhere between 5 and 10x. So that's with a very small allocation and just waiting a decade, right? So where people want to fall in this in terms of what exposure do I want is going to be entirely subjective to them, right? So even if you're in decumulation in your pension, there is an argument to holding some Bitcoin, right? In terms of, intergenerational wealth, et cetera, right? But I saw a stat recently that said since 2020, if you'd have held, I can't remember, it was either 2% or 5%. So let's say 5% or below in Bitcoin and the rest in cash, it's returned 17% a year, which is beating the S&P, right? So even in decumulation, you could hold a percentage in Bitcoin and then just maybe offset some of your portfolio into cash to vary that volatility. And just to touch on that, Ed, very quickly on that volatility, Bitcoin gets a very bad rep for being volatile, right? On day-to-day volatility, it actually sits somewhere in the middle of the Mag 7. So it's actually less volatile day to day I think it's on a 90-day trailing average. It's less volatile than Tesla. It's less volatile than Apple, I think. But it sits somewhere in the middle of the Mag 7. And we don't accuse them of being crazy volatile, right? It's just that Bitcoin can do these very large moves in very short amount of times because of the halving, because of demand, finite supply, et cetera, et cetera. But if you look at the 200-week moving average of Bitcoin, so again, coming back to that 200-week number, that 4-year number, 100-week moving average of Bitcoin has never declined. It's only gone up and to the right. So the declines are temporary. The advance is permanent to date.
I think what's interesting there as well, I think, and you mentioned Tesla is, and you said earlier, the thing about Bitcoin is a lot of it is removing the human element. And actually, those stocks like Tesla, very much, for whatever you think of the CEO of that company.
Don't get me started, Ed.
I won't, Chris. Not for a different podcast. There is a very human element there that will affect the stock price, and that can happen at Tesla as much as it can happen at Meta or Apple or wherever. Apple is pretty stable, and they have a leader now who's been around for a long time and is seen like a safe pair of hands, but he won't be there forever. So what will that stock look like when he leaves and they have to get somebody new in? Do they trust that person? There's all those kind of human element questions that bring that kind of fallibility in. There's also that, the involvement of institutions has had a big impact on volatility as well, right? Because these are just big block customers that just buy loads of it and then sit and do nothing, essentially. And they don't react like normal kind of retail investors might react to day-to-day events either. Is that fair?
I think that is fair. And it's also that feeds back into something that Chris asked earlier about, can it go to zero? I think you've got such large institutional and nation state demand now that I'm not sure that there is a debate currently within the Bitcoin community. It tends to happen every cycle, so I'm not really giving it much attention, but whether the 4-year cycle is dead, whether it's gone, because we've got this massive institutional, essentially a buy order at sort of 10, 15, 20% below the current price, where BlackRock will just hoover it up, MicroStrategy or Strategy will just hoover it up. I think it's too early for that. I do still think 2026 is likely to see a large, 50 to 70% drawdown, like historical numbers. But certainly the stat that I saw recently is, so we're in Epoch 5 in terms of the mining, in terms of the halving. So we currently, about 3,100 Bitcoin are mined or released a week, and institutional demand, just institutional demand, so from the likes of Strategy, Smarter Web in the UK, is currently sat around 5,000 to 10,000 a week. So this is why we would expect to see these very large run-ups over the next coming weeks, because there's a massive supply shock.
Yeah.
And just actually, let me just touch on your point about founders there. That is the exact reason. So without going too much into the history of Bitcoin, but it was founded by someone or a group called Satoshi Nakamoto, right? And that's a him, her, or they. We don't know. And they very smartly recognized that founders can be attacked, and the products that they create can be attacked as a consequence of being created by them. So they have remained anonymous. They remained anonymous throughout the creation process. They mined 1 million coins to get the flywheel started. Those coins are visible on chain in a wallet that has never been touched. And Satoshi disappeared sometime in early 2010. Never been seen or heard from again. So that, that recognition that founders are fallible is one of the reasons why it is completely decentralized and created by some anonymous party.
In a UK context, there was a news story in the past few days that's kind of relevant to that. And it's somebody who we talk about plenty on this podcast, don't we, Chris? The Chancellor Rachel Reeves, who, and it was a bit, I think the coverage of it was a bit speculative. There's not been any kind of official, suggestion that they might do this, but it was suggested in the news, shall we say, that Rachel Reeves might sell off, I think it was about £5 billion worth of Bitcoin in order to plug the government's kind of current budget deficit, and basically solve a short-term financial problem for them.
Well, she should be holding it for 4 years. We've established that.
We should be getting more next year. What are your thoughts on that, Danny? I mean, I could guess what your sentiment's going to be about it, and probably the same as mine, frankly. What do you think about selling off the China to pay for something?
Sure. Well, actually, just a brief history of those coins. So 61,000 Bitcoin that were actually part of a seizure from, it was a scam that was being conducted where people were essentially scamming other people out of their Bitcoin, but they were Chinese nationals based in the UK who were scamming other Chinese nationals based in China. And it's interesting, Chris, that you mentioned they should be held for 4 years, because that was in 2021. It was exactly 4 years ago. So if anyone with any iota of having an understanding of Bitcoin and knew the history of Bitcoin was in charge of those coins, they would see that the price of those coins, even if they bought them, even if they seized them at the absolute top, which was $69,000 in November 21, now worth 2x, right? So, but if they were seized at any other time, they're worth more than that. So, or they've accumulated more than that in terms of value. So I think it's incredibly short-sighted. What I will say is, in her defense, I'm not sure this was actually actively being explored by Rachel Reeves. I don't know this for a fact, but those coins are still heavily contested in that I don't think the case has come to conclusions, which means we don't actually know what's going to happen to them. So I think as part of financial crime like this, often the proceeds will go back to the people that have been scammed. So, I'm not sure it's even within her remit to sell them if she wanted. There's also some wild rumors that we don't actually know where they are. So in terms of who's got the keys to those coins, so even though the UK in theory holds them in inverted commas, they may actually be lost because someone could have lost the keys.
It might be like that chap who lost his USB stick in a Welsh. What was it? It's in like a.
It was in a landfill site.
Yeah, landfill in Wales.
The council wouldn't let him trawl through it.
He's there's a really funny story about that very quickly. Yeah. So he is now raising VC funding because he has offered repeatedly to Newport Council to say, I'll come in and dig it up. Just let me search. I'll dig it up and I'll share the proceeds with you and I will pay out of my pocket to make it good. Right. And they keep saying no. So he's now raising VC funding to just buy the land.
I like it a lot. That is good. So I did hear that about the situation with the UK Bitcoin holding. I think we have had a suggestion from some politicians, probably more on the right than the left, that actually, and the US has been making noises about this, holding a strategic Bitcoin reserve. We alluded it to a little bit before about, governments getting involved. Do you think that's realistic? I mean, realistic idea, not realistic in the sense of, could we do it, but would somebody eventually do it? Would the writing be on the wall as like, no, we have to buy some now and hold it?
I think we're watching game theory play out in real time. So countries are already doing it. El Salvador's doing it. Bhutan are mining Bitcoin with clean hydroelectric power. They hold over 10,000. It's about 40% of their GDP. They've used Bitcoin to double their civil servants' salaries so that they've prevented brain drain. And the US is pushing through a bill. I think Senator Loomis is pushing through a bill to hold 1 million Bitcoin, which is 5% of all the Bitcoin that will ever exist, as a strategic reserve. And the difference between strategic reserve and, I've forgotten the other term, is strategic reserves you don't sell. So gold is your strategic reserve, Bitcoin is your strategic reserve, but the rest of their X's crypto, they're talking about using that as a, I've forgotten the term for it now, where you do actually use it, right? You use it in times of, so like you hold oil in the other one and then you release the oil in times of low supply, and I've forgotten the term for that. So Yes, I think we're watching it happen in real time. I think the UK will do it. I would hope the Labour government gets on board. My fear is that we will need the next government to do that. So we're still 4 years away from that. And at that point, I dread to think what the price of Bitcoin will be, and we've missed out on those gains. There's actually something that Michael Saylor says. Michael Saylor is a very famous person within this sphere. He's the CEO of MicroStrategy. Highly recommend going and watching some of his talks. He gave a really good one at Bitcoin Prague very recently. It's something around the only number you need to remember is 21, but you'll find it if you search for it. He says something which is quite controversial. So he says the first government to print money to buy Bitcoin wins.
Yeah, I think one of my favorite ideas around that, and that's around where I live, there's a lot of wind farms, and one of my best ever ideas I saw was sticking miners onto the wind turbine. So when the wind's blowing and there's too much power generation, you just turn on the miner and let it mine Bitcoin instead of sending you electricity effectively into the ground. So it's, get into the mining business, just grow your own and get on that train kind of thing. That idea's been around for ages, as far as I'm aware, but people don't seem to pick up on it. We should be campaigning to Ed Miliband surely to get him on the train.
We are. People already are within Team GB. We call ourselves the
excellent
British Bitcoiners. It's actually it's a really good point, and it's quite often the FUD, so fear, uncertainty, or doubt, that is thrown at Bitcoin, is that it uses a lot of energy and it's bad for the environment. Cambridge University released a study in April this year that showed that over half of the Bitcoin network is powered by emissionless energy. And that's because Bitcoin mining is expensive in terms of power. You can't plug a Bitcoin miner into the wall, right, and use power where there is already a cost of the proof of work, right? So you've got to dig coal out of the ground, or dig oil, convert that into something that can be burnt, then ship that to the plug in your wall. There's so much proof of work there already that it's too expensive, certainly in this country, but generally around the world. So Bitcoin miners go where there is surplus free energy, because it's pretty much the only way to stay profitable. Right? So they go to underused hydroelectric dams, they go to underutilized solar farms in Texas, and they go to underutilized wind farms, right? I live on the south coast. There is a wind farm off the south coast that you can see from Eastbourne to the Isle of Wight. It's about 25% of the south coast of the UK can see this wind farm because it's that big. We curtail billions of pounds every year. So curtailment is exactly as you alluded to, Ed, which is when the wind is producing energy at a time the grid doesn't need it. So they just earth the electricity. They just put it back into the ground. If you just put a couple of Bitcoin miners in the bottom of each one of those, the UK would be turning free energy because the wind farm already exists, right? We've already paid for it. We're also subsidizing them, right? So that's what I mean by curtailment. We're actually paying the owner of the wind farm to earth the energy, right? So not only are we wasting free electricity, free energy, we are paying the taxpayer in this country pays wind farm owners to earth free energy every year, and it runs into the billions. And instead we could flip that on its head and make billions.
Yeah. We've run through a lot of we've got through quite a lot, which I'm quite pleased about. There's a lot of really interesting threads that we could kind of keep pulling at. I think to finish up, let's look at a little bit. If somebody's listening to this podcast and thinking, okay, well, what do I do next? I don't have any, or maybe I've got a very small amount on somewhere like Revolut or something like that, just dabbled a very little bit. What would your kind of recommendation be for, what to do next? How to learn a bit more in a way that is kind of, sensible and careful approach to it? What do you think you would suggest?
It's a really good question, and careful and sensible, I think, is the way to go, right? What I'm going to say is it's going to take an hour or two of your time. Please put that time in before you start throwing money at this, right? So the first thing you've got to do is watch a video by a chap called Joe Bryan, and the video is called What's the Problem, right? Because quite often in the Bitcoin community, we jump straight to Bitcoin is the solution. Okay, well, let's find out what the problem is that we're trying to solve, right? So What's the Problem by Joe Bryan. Then watch some videos on Bitcoin, right? What is Bitcoin? If you prefer, you can read a book called The Bitcoin Standard, right? And that might take you a bit more than a few hours, right? It's probably a 5 to 10 hour read. Once you've got that information, then you can start figuring out solutions about how to buy it. What I would suggest is starting with a couple of apps. So there's an app called Strike and there's an app called CoinCorner. CoinCorner is the British one. If you want to support a British business, it's based out of the Isle of Man. I use Strike, but that's because I found it first, right? But what they do is set up an e-bank for you, right? Which means that when you send them money, it's like, because we already have capital controls. I bank with NatWest. I am unable to send any money from my NatWest to any crypto exchange for my own safety, right? So when you send money to Strike or CoinCorner, they set up an e-bank for you, which means NatWest, I send money every month to Strike. NatWest think that I'm just sending money to my own bank account, similar to a Revolut, similar to a Monzo, right? And then what you can do is just set up a recurring buy, right? So at the moment, I'm only buying £1 a day, but that's because I've already deployed into Bitcoin, right, in the past. But I just want to keep buying it, right, in case it goes up forever, right, just in case. So I only buy £1 a day. But a year from now, if we see the historical cycle, I will increase that to £10 a day. At the real lows, I'll probably increase that to £100 a day for a short window, right, for a month or two. So all I would suggest is start with those. Just buy an amount that you feel comfortable with fairly regularly. It doesn't have to be daily. Funny story, a friend of mine was the barriers to entry for Bitcoin can be quite heavy in terms of trying to buy it. When I showed him this, he was like, this is great. It removes all those barriers to entry. I'm going to do it. We met up about a month later and I was like, how are you getting on with Strike? And he was like, yeah, I'm buying £2 an hour. I was like, I didn't even know you could buy it hourly, but you can clearly buy it on any recurring, what's the word, cadence that you want to do. And I would just suggest that start with an amount of money that you would feel comfortable setting fire to in your garden, right? That's going to be different to everyone, right? And then just have skin in the game, watch how it goes, and then decide on your own risk tolerance.
Yeah, absolutely. I think that's great. And I mean, look, this speaks for most investments. And, we talk about investing periodically on the podcast and on the website. And, we're always sticking, obviously, the disclaimers on, you've got to be prepared to lose your money and all this kind of stuff. It goes for, and we've talked through it through this entire episode, all these investments, be they, stocks, bonds, bond market in particular at the moment is looking a bit, bit scary. They all carry risks of their own, and it's for us to understand those risks and judge appropriately what we're willing to tolerate and what we're willing to put aside for that. So I think that's it's really refreshing. It's straightforward. Be realistic, and just make sure you understand what you're getting into. I think that about wraps us up. It's been really, really interesting, Dan. Thank you very much. Is there any kind of further takeaway? If anybody wants to find more about you, where's the best place to go and look? Do you have a website or LinkedIn, or what's the best place? Yeah.
So at the Bitcoin IFA on X, Daniel Parkinson, or the Bitcoin IFA on LinkedIn, or just head over to thebitcoinifa.com.
Brilliant. We'll stick all links to all the various resources that we mentioned through the podcast as well. We'll put it all in the show notes so that people can go straight to that and be sure they're getting the right thing. It's been really fascinating. I think we'll have to get you back on as soon as there's some more Bitcoin news out there, because there's always going to be plenty. We'll keep an eye out for that ETF exclusive, and then maybe it might be what do we do now, everybody type episode. But yeah, thank you very much, Dan. Thank you, Chris, as well.
My pleasure always.
Yeah, same. My pleasure.
Thank you. That about wraps up. Keep an eye out, everybody. We'll be back very soon with plenty more. Thank you for listening, and goodbye.